Peter Matlare has been at the helm of Tiger Brands, the producer of products like Tastic Rice and Albany bread, since 2008. There are some analysts, like Keith McLachlan from Alpha Wealth, who say we're witnessing the slow death of what was once a great business. We'll tap Peter Matlare's brain on that this evening. This is Tonight. I'm Bruce Whitfield. Tonight, I'm joined by Tiger Brands Chief Executive Peter Matlare. Let's find out whether or not the market is overly sceptical. Earnings for the first 6 months of this year came in flat. Revenues grew. But Dangote Flour Mills is becoming a millstone around the neck of Peter Matlare. Is it not?
No, Bruce.
I saw the look of disdain on your face.
Well, forgive me for disdain, but I love fact rather than fiction. I mean, if you look at a business, clearly we bought a business that was not in the kind of shape that we expected it to be in, and we've been punished for that. And as you know, you've asked me about that a number of times, but when you look at what's happened to that business in this last period, quite clearly, volumes up 16% nicely in a competitive market. Losses down 30-odd%, so we're narrowing those losses, so according to plan. In terms of our extractions and all of the stuff we do on the back end, you're seeing some great improvements. We clearly are not where we want to be yet, but directionally, we're very comfortable that we're taking it where we need it to go.
The concern is having overpaid for Dangote Flour Mills. The only person who's happy about the deal is Mr. Dangote himself, Aliko Dangote. Maybe it's how he became the richest man on the African continent. But he did very well out of the deal. Tiger Brands shareholders have done less well.
No, I'd agree, and quite clearly that's been a big disappointment for us, that we've not been able to deliver for our shareholders in that market in the short term, that which we anticipated we would. We have to look at Nigeria, though, in a longer term. Now, that doesn't mean throwing good money after bad either, Bruce. It is about, are we able to fix this platform and build on top of that? Can we get into those richer margin categories? None of them will be easy, that can then give a better return. And both at an exec level and at a board level, we continue to assess this. And as we've said in our SENS announcement, again at the end of this year, we will continue to assess, are we doing the right things? Are the right values coming out of that business? And we will always be prepared to make all the tough decisions.
How has the Dangote deal informed your approach to Nigeria?
Oh, look, there are a number of lessons I might well have indicated to you before. And it's not just around the due diligence process, which is important. It's also making sure you have the right management teams that have what I call in-depth domestic market experience. And that's really important for us. We'd had some really talented people from South Africa that we put into that business, and we got it wrong. If you look...
Naspers did that in China, and they changed their strategy, and Naspers, the rest is history, by putting South Africans in charge of domestic businesses. Is it being run now by Nigerians?
The leader is still a South African, but he'd spent time, he ran Unilever in Nigeria for a number of years. FD comes out of India, customer guy is Nigerian, marketing Nigerian, some Ghanaian. So you're beginning to find that as you look for the right talent for these markets, you really have to dig deep to make sure you... And then, of course, they've got to work and gel as a team. And it's not just at the top structure, it goes 2, 3, 4, 5 levels down, because you've got to create a culture in that business of performance and adherence to discipline. And that's a journey for us.
But how does it inform the next deal you do in Nigeria?
So the very next deal we do in Nigeria, should we do a next deal in Nigeria, I'm not prejudging that in any way, is that, again, we would look very carefully at not just the assets that we acquire, but the capability of management, the existing management team, our capability to source very quickly where necessary the right management team. But more importantly, I think we understand a lot better now intrinsically at Tiger how to operate in that market. So I think we'll be able to look around the corner a lot quicker than we might have in the previous.
You must have studied the SAB Miller example. You must have looked at SAB Miller, which has been the most successful exporter of South African talent in the last 20 years. How they trained intensively in South Africa and parachuted managers all over the world. And now the guy who runs the South African breweries business of SAB, I think he's Colombian.
He's from Colombia.
And you've just, a global business now is moving its talent around wherever it needs it. Surely that's the strategy that more South African businesses looking to expand need to implement.
Oh, absolutely. But there are two parts to this, Bruce. So that's one thing bringing, and we do bring talent out of those markets and we train them here. But there's also something about our existing South African talent being put into those markets to learn how to operate in very, very different markets. So route to market in the Cameroon versus Ethiopia is very different in some respects from South Africa. However, in the bottom end of our South African markets, there's some lessons we've put in place around managing prices, doing deals, etc., that have come actually out of some of the tabletops you'll see in the Cameroon. So there is, people tend to think it's one way. It actually goes both ways to different degrees. And the breweries model, you're right, is an excellent one. But they also learned that, you know, you've got to grow domestic talent in those markets.
Sure.
If you don't, you can come a cropper.
Absolutely. You've got a problem in East Africa as well. So
Yes.
in Kenya, you got somebody who either couldn't count or counted a bit too well, did a bit of a Tesco in the United Kingdom in terms of fudging accounts.
Absolutely, and very disappointing, because I used to go around the world bragging about the Kenyan team. You know, our chairman there, Chris Karubi, is a fantastic fellow, and he had built a great team. The fellow who led this was our MD. He's no longer with the business, as you know, but before that he was our FD. So what safer hands would you expect? But chasing year-end numbers, chasing volumes, chasing ultimately the benefits that come with that, really caused someone to lead a few of his colleagues completely astray. When you look at the core of that team, though, these aren't made up of bad people, so we shouldn't overreact, but it has had a very bitter taste both in the Kenyan team's mouths as well as obviously with our
How
mouths.
far down the track did this get? Did sort of auditors pick it up within a month or two, or had this been going on for years? How deep was it?
I think it probably ran, we would estimate, for between 4 and 5 months.
Okay.
And so both our external auditors and our internal auditors did not pick that up. Again, a disappointment for us, because that's part of the reliance.
You pay good money.
You pay for that.
You pay good money, yeah.
Absolutely. But again, you know, the culture at Tiger is not to blame shift. We really like to step up to the plate and say, where did we get anything wrong? Our governance, we thought, was absolutely good, but we've gone and put in additional measures. You know, we got all of that team to sign Sarbanes-Oxley letters that demonstrate there's nothing that they've done wrong, that they know that. It's one thing to sign a letter. We again continue to learn. It's about the ethics that drives you and your top team. So a disappointment for us, but I really don't want to give the impression that the balance of that business is rotten. It's going to take us another 5-6 months to clean it up, as in get the business back on an even keel.
What sort of numbers are we talking here? What sort of level of fraud?
So the swing, and you really have to separate this, because only part of that was about forward sales into the following period. The other was incorrect provisions. So you know what happens deliberately so, and so we've had to clean those up, etc. And so it's a combination of those two. So 25, 35, and let's just call the balance in other practices that we've had to clean up.
How's South Africa going? I mean, we've got a tough consumer environment. People with jobs continue to get decent increases. We've seen the civil service settlement at 7%. That's a manna from heaven for food producers, because a big proportion of employed people in South Africa earn civil service salaries. They'll continue to buy Tastic Rice at a higher margin than a cheaper brand, perhaps. But we have the unemployment crisis. We have people who live hand to mouth. We're not solving that problem. What's your sense of where we are?
Look, as an economy, we still have some choppy waters going ahead. There's no one who's going to tell you that structurally this economy is now on an upward trajectory. We all take responsibility for how do we fix that, create jobs, etc. But if I look at our domestic business, I'm really pleased with the strong underlying performance that you've seen. You know, people talk about these great brands. I forget the name of the chap who says he's seeing the slow death of a business.
Keith McLachlan.
Yes, I'm going to...
You're going to look for him.
Yeah, Dolweni, as they say in Xhosa. I've written him on my knee. Anyway, so the real issue about that is, if you look at the underlying growth in this market, our volumes are up. We've maintained or grown market shares. So we're beginning to see this business continuing to reassert itself. When you're the big guy, everybody can take shots at you. Don't forget, a number of our competitors' margins are half our margins, and so we've got to make sure we keep these relativities right across the piece. I'm really pleased that our groceries business is continuing to improve, 180 basis point improvement in margins. That's great for us. If I look at our bread business, that's the one that took a lot of turbulence.
Sure.
You saw we're down volume-wise 3%, but our grains business, the margins have either held, well, they've actually slightly up. And across that grains business, you see a strong portfolio of brands, Tastic, the whole lot. If you've got Jungle, etc. So you've seen really strong improvements in that area.
Fuel costs are going up. We've had a big drought. Food inflation coming to the fore.
Absolutely.
Who absorbs that food inflation? Because households have got a breaking point in terms of when they change their shopping habits, buying down, buying less, changing the starch they have. And you don't want to lose the Tastic customer to Millie Meal, because the Tastic customer may have gone from Millie Meal to Tastic. How do you manage that price elasticity in a tough environment?
And Bruce, that's the most difficult dance that you do in our business, price, volume, margin dance. So there are a number of measures we put in. The one is we've put in some cost containment exercise across the business. We said we would take out R500 million of annualized cost over a 3-year period. We are getting close to that, and we need to start looking for the next incarnation of that. So whether it's in procurement or fixing our IT systems, you're beginning to see those cost improvements come through. We've used a lot of that to push back other cost push. So where you've had RAND enabled or other enabled cost push, it's really we sought to mitigate that in part. But we've also had to take price increases. So I don't want to give you the impression that there's been no inflation. You've seen 6% inflation. And quite clearly what we have to do is to manage those relativities. These are great brands, great products. It's not just the name on the product, it's the quality of what you produce. And as long as we continue to deliver value for the consumer, we continue to see the consumer buying our products. So across the piece, that's why volumes are up. But should we start pushing our premiums into unholy territory, we will see volume drop off. And we never want to be a niche business. We're a core business. We're not a niche business. And so we have to keep innovating and investing around our brands.
I mean, what does the RAND environment do for you? How much competition are you getting from outside in terms of cheaper imports of food? The guys at Famous Brands, for example, get their tomato paste that they put on the debonair's pizzas from China. You know, you want to be supplying those debonair's guys.
Sure, absolutely.
They can get stuff cheaper elsewhere.
Look, Bruce, that's always mixed blessings. So you're absolutely right. There are a number of retailers that will have a certain level of what we would call house brands, or as you well know, and they'll bring them from around the world. We've got to make sure that landed cost we are always able to compete with, and it's not always easy, you know. And ironically, I look at our pasta business. We're out of capacity in pasta.
What?
We're out of capacity, but we don't have the demand sufficiently to put down a new plant yet, so we're having to import. But ironically, I'd love to be importing our pasta from our Nigerian business, except I'm bringing it out of Portugal because we have lower duties coming out of the EU than coming out of... Now, something's not right there, Bruce. I'm sure you would agree with me, and I'm hoping I can persuade our Minister Davies and his team that we should relook that. But the point I'd make to you is that you do have imports. We've got to be able to compete against those imports, and that's going to be about managing our cost base, taking costs out where necessary, innovating, and making sure these brands remain relevant in the hearts and minds of our consumers.
There we go. Tim Noakes isn't having such a huge impact, clearly, then on your dining habits. Pasta sales for Tiger Brands still going through the roof. The Tiger Brands Chief Executive, Peter Matlare. Thank you for coming, Peter. Nice to see you. Thank you for watching. There'll be more tonight, tomorrow. Till then, good night and goodbye.